Greetings, market rebels. Welcome to this week's macro measure. It's actually Friday, October 6th, and it's a little after 2 p.m. here on the East Coast. But once again, got some heavy duty family stuff happening. All the kids are coming home this weekend, so we have a lot going on and got to get this done while I have a chance. So, taking care of the more important video, macro measure. Welcome to this week's macro measure. And disclaimer is in front of us, and now we're going to hit the old intellectual property rights notice, and then we are going to bring up this week's stream. And I'm kind of sticking with that more of an abbreviated stream. There's a lot of other things I would like to note on here, but again, trying to keep things really slimmed down compared to the past, because that's really the general preference, it seems like, or at least the more vocal preference. And there you have this week's stream. I'll leave it up there a little bit longer. I'm just going to flash last week's stream, and then we'll come back and talk about this week's stream and a few other things. But that's last week's if you want to pause and snapshot that, just to know where we're coming from. Again, some things are the same and some things have changed. So just rolling along as we typically do. But on that note, I'm going to stop the share briefly and reposition things, and hopefully we will be able to get into things better this way. And let me just stick this up over here, and we should be able to get started with I think I may just start right here, and we'll go through on screen 3. I think I'm just going to go through these point by point. And then we'll get to some tabs in the charts. But the quick review and summary would be, right, that this is from last week, pretty much just cut and paste right from last week, just to see where we left off. And we thought things were oversold, nearly bombed out. We thought the market was still tricky. We thought we'd still have to keep our eyes on TNX and DXY, and we said remain at DEFCON 1. And so we did say that we thought if they powered higher, TNX and DXY right through the highs, that could bring about more corrective action. They did have a rougher week. For example, if you look at IWM, opened on Monday, pretty much got rocked right with what was happening with yields, with the dollar somewhat, but the dollar really tailed off as the week wore on, and TNX continued and other yields continued to power up. But I think we were very close to that cascade phase last week, but we did note on the SPY chart, which I may as well just bring up since we're right here. Make sure this is showing the right view. So yeah, we were saying, right, that it made sense. This is a different chart, but just for now, I'm using this. We thought it would made sense maybe to come to this 200 in blue. And on this chart, it's blue. And got very close. They really tread water above the 200 all week long. It's a big area. We know that, right? It's very widely followed. And then, of course, you have today's explosive move higher with, again, about an hour and 45 minutes remaining. So they got down to that level we thought could be an important level. They've held it so far. The nature of the hold, I think, was very dubious as usual. But unfortunately, that's nothing new, because that's the way that they roll. Maybe that's the way they've always rolled, for all I know. It's pretty much been that way since I got started trading professionally in the early 90s. Very close to cascade, but they held it off. We did not have that early October relief rally, so we should take a look at that in a minute, try to remember to do that. But we did have an outcome that, with only an hour and 45 minutes roughly to go, that the week was a tricky struggle, but it does seem to be ending on that explosive PPT shenanigans note, even in the face of rising yields. But as you may have heard me say many times before, the bulls need to step in. They need to step in now. They need to move things away from the danger zone. And that's what that line's all about right there, because the 200 is effectively the danger zone for a lot of people. And now you're not really at risk of getting smoked with a cascade type sell-off for now, right? Because you have moved out of proximity there. You're quite a bit away now from this 200 day. Now, it all happened, right, in one 6-hour-ish type move that we've seen so far. But hey, it's not as frustratingly artificial as it is. And that's really the part that bothers me, not that it happened, because we've been noting how bombed out this market was. It was justifiable to say that, yes, something like this could start to unfold. I think it's in the face of the rising yields, and also with this absolutely farcical jobs report that people are already slicing and dicing, and it's basically showing that, again, most jobs are service jobs, and many of these jobs they're claiming are this wonderful jobs development happens to be from people taking a second or third job to make ends meet in reality. To which we can add that all the GDPs pretty much of the last 3 years were revised lower this week. So it just kind of shows you we've been calling out the BS for decades, but it's just been going on as far as I can remember. But it just seems like it gets more egregious as with each passing year, and there's no one holding anyone accountable for bogus and brazen statistical manipulation. But that's a whole different subject. Anyway, just worth noting the gap we had been covering for a while, that did finally close last week. I'm not sure if I noted that. We did note that we thought the next big test would be here. So far, they held it. And if you want to read into this, you could say, well, if you want to read into the technicals right now, I don't know if you're going to see much better setups, right? Where you have this very strong, assuming we close here or higher, you have this very strong candle, right? Very, very strong reversal candle, basically an outside day, or you could call it bullish engulfing. And you have the long-term trends are still positive, and you became bombed out, right? You were very oversold. And now you're getting, if you just even use some basic indicators, you could see that there's technical improvement that's on the doorstep, right? You're really close. And so to really a very great setup. Now, if this wasn't as farcical as it is, I would probably be pounding the table. My reservations are, after speaking with Ryan too, on the whole thing, my reservations are that this is maybe OpX and zero DTE sort of assisted. So whatever the group was that stepped in and decided to, President's Working Group decided to step in and do what they did today with this market, right? Because it was either you're really in trouble, you can't even hold the 200-day, and then all hell breaks loose, more than likely, in my opinion. Because this market just really struggled all week long to find a bid and hold one. It just really couldn't do it until, of course, this magic moment. But that was what they would have been facing. They're now very far away, right? You really have to drop quite a bit now. You've got to drop a couple of percent plus from where you are now to get back to where you're back in danger near the 200-day. So for now, they're out of the woods, and I wouldn't be surprised, right? Under normal circumstances, I would love this. And whatever I could lay my hands on that had really nice setups and is working today, I would be getting positions on, because the long-term trend, you get super oversold. We've been saying you're due for this to happen. In most cases, right, you find a way to make this happen. They did it again, and you probably have more bullish setups appearing on charts than we have time to cover at this point, based on what's happened, because so many things were oversold. Virtually every idea I put out, bull or bear, I had to note, right, oversold, very oversold, approaching oversold. That's the kind of market we've been in. And just all you need to do is look at what's been happening, right, since the middle of September until early October, and you can see it's been really rough. I mean, that's a rough stretch for sure. So no wonder things were the way they were, of course. But now, right, what happens? Well, here's your 20 there, and it's in yellow on this chart, and then red is your 100-day, and then orange, of course, on this chart, it would be your 50-day. So could they work this thing back up towards maybe this gap closure right here? And if they did that, and they did it in a way that, could they work their way back up towards the 150 somewhere here next week, maybe early the prior week? I think they could. I mean, I don't think you can rule that out, because A, this is what they do, excuse me, and B, excuse me, you also have the earnings season that's coming up, right? That's approaching. Now, we're still early for that, right? It's going to be a little bit longer, but right, the optimism is always, it always seems to be there, right? They find a way to treat things optimistically heading into earnings quite often, even in the midst of, well, let's say challenging environments, right? So you've got that going on. You also have the seasonality, which I'm going to bring over our tabs now, and we'll get back to discussing things on the PowerPoint, but I'll jump to this one here first, and then we'll go back. But right, we have been noting, right, this is right from the news, one of our newsletters, that you're in this sort of yellowish green rectangle right now. And typically in the third year, the green line, you have this really good start to October. Well, clearly we did not have that really good start to October. And you can see that every year tends to start pretty well in October. So they might be flipping the script a little bit, where they may try to now, have a rough start and then put the rally together that we were all, excuse me, thinking just based on historical precedent could begin right in early October. And sometimes when we were as oversold as we were last week, and it's almost was too easy. I think we even noted that it was almost too easy to believe you would get a rally. And of course, we don't trade off of this. This is just there to kind of keep us there, keep it in mind and see if we're still tracking it, because generally, right, it's something you can hang your hat on a little bit when it's working. But our whole thing has been keep your eye on yields, keep your eye on what the dollar's doing. And that's really been, I think, the important way to look at it, the more effective way to look at it. But let's look at what yields have done, because this is the big story. And we've been talking about this. I feel like I've been talking about this for a couple of years, honestly. But finally, right, it seems like it's starting to get to where you maybe thought it could, and maybe more for all we know. But you have to go back to, on the 2-year, you've got to go back to 2006, right, to find something that compares to where we are. So what's that, about 17 or 18 years nearly, right, that you're going back. If we go to the 5-year, I mean, I'll just do these to be thorough, but it's the same general principle. And of course, more people are probably keeping an eye on the 10-year, but you can see that we've got to go back to 2007, right, to get back near this territory. So rates are really up there. This was the whole QE to infinity era that helped bring about some of these excesses that we have these days. But this is pretty much how standard operating procedure, as far as I can tell, based on the last 30 years of observing, 30 years plus really of observing this stuff. Here's another one, of course, the 10-year. So you get the idea of what rates have done, where they are, right, and how quickly they've moved back up this far. So to me, like, this has always been the problem. And like I said, I'm pretty sure at the start of 22 or end of 21, this is one of those things we were having a roundtable, market rebellion roundtable, and we were all talking about. And this has just been my big thing. It's the basics of how everything works, and I think a lot of people acknowledge that, but a lot of people apparently like to forget about it when they're putting other people's money at risk, unfortunately. But here's your probabilities now. It's worth checking the rest of our tabs since we're here. You could see that last week we were at the heading, staying where we are was an nearly 82% chance. We're down to about 71%. So that's taken a little bit of a hit. And now there's consideration, right? A little bit more consideration that we go up. And some of the Fed talk this week did seem to suggest that was possible. I think there's a lot of bad stuff on the way economically, but they never call me to check with me on stuff like that. I think they ought to let this sit here for a couple of months and just see what the fallout is before they go even higher. But we'll see what happens. Anyway, sentiment, as we said, last week, it was not good for us, right? If we were wanting a bounce, to see that the sentiment was this negative, right, overall, because it's a contrarian take, right, that you're looking at here. That's the way, of course, most people look at it. So with AAII just overly bearish essentially last week, that may have helped bring about this week's action. Now, this is something else we consistently check, and this is the number of stocks that are above the 20-day moving average in the S&P, and you can see that percentage, of course, but you can see that right on this week's low, we really did get down there. I mean, you can make the case that sure, you could go a little bit lower, but really, like, this is what I mean by sometimes it's got to be close enough. And I think to not think that there could be a relief rally when things are this, as I've been saying, bombed out, not like it's my unique phrase, but I think it's a good one, right? Things are this bombed out, right? You don't see the market really that often stay that much worse than where we got to this week for too long, just going back years, right? You just don't, it can get lower, and I can't even say that it won't get lower. It still could, right? If today's shenanigans really are about zero DTE and we see yields just keep jumping, this market, this one day wonder, this could be this could be under pressure all over again, right? So there's your number of stocks above the 50, and then finally we'll check the 200, and that certainly still has more room to go. So to me, right, the way that I'm seeing it, I think a relief rally, if I go back just to my charts and I take a look at this chart here, to me, like, this continuing relief rally makes more sense than not. The problem is my confidence level is not where it normally would be because we've got the zero DTE, and right, even though yield, the TNX backed off from the highest print that it put in for the week, which was earlier today, it still closed at a new recent high, as far as I can tell. Pretty sure it did anyway. Hold on, let me double check on that. Yeah, nope. I was just under it. My bad. So yeah, I'm glad I did check on that. Let's see if we can bring that up here. But yeah, there you go. So it did back off enough. But this is, as we've been saying, this is a little bit overdone. Let's be honest here. So to have this back up a little bit, I don't think that would be crazy. And I don't think it means it can't continue to move higher. I just think that it's had an incredible run, right? You went up almost, not quite, but almost 1 full percent from September until today at the high. You didn't quite get there, right? Of course, but just saying that's just a damn big move. And you got to acknowledge that, and you got to realize that it probably is stretched and it could come back in a little. And of course, that would probably, I would say, help the relief rally prospect. So this is another tough call in the sense that I don't want to rule out that, even though there's a lot of zero DTE shenanigans and that, rates could still keep going up, that could put pressure on this all over again on Monday, right? But overall, if I had to say, like, without that zero DTE, the shenanigans, I love the setup here in terms of being a bull. I mean, this nice corrective action, it seemed to really bomb out the market. It ran its course. And now, to me, it should be a little bit of a relief rally at the very least that you should see, other than the fact that, can we trust today's action as being true? That's the big problem that I have. Is today's action legitimate? I think there's a lot of people that have been waiting to buy that are now feeling pressured to buy. And I do know there's a lot of people that recently stepped in and got short, which we noted last week, which were hedge funds, usual suspects, hedge funds and the CTA crowd, right? So, and there was probably fresh money drawn in expecting this thing to break because of what yields were doing, excuse me. So none of that should surprise us. It's just that, right, is this legitimate? I mean, if it's, I'm going to say, if I had to force the issue, I'd say yes, it's legitimate. Right? And the reason for that is because of all I just mentioned, combined with the fact that TNX probably is due for a breather, right? So yeah, there's probably OPEX and zero DTE shenanigans galore that are assisting the PPT with what they're up to today. I can't deny that. But if you force me to make a call on it and say, well, how does it play out? I'm going to say, look, it probably plays out that this thing keeps going for at least a few more days, or at least they try to keep it going for a few more days. But again, I don't know what yields are going to do on Monday, right? If yields are screaming higher, that whole bet could be off. If yields are neutral, up small, down small, I think they keep rallying. Put it that way. I mean, that might be my best way to kind of put that opinion out there that everybody craves, but it seems like anyway. So the assessment is, you just heard it, right? I think this is another masterful hit, very vicious. There was super oversold conditions. You were potentially breaking down. The timing is nonsensical in the sense that, right, they're using like the cover of the jobs report that was farcical. I mean, and I note that on the next line. I do think it's, as I noted, it's this has been assisted by zero DTE and OPEX today. This was really an all they needed, which I say all the time, right? They don't need much to hang their hat on. This is what helped them pull today's caper, but can they sustain this, of course, is always the big question. And like I said, if I had to force it, I would say I think if we assume rate neutrality on Monday, I think they do keep trying to force it higher. That would be my take on it. It's, you know, now I can't really speak definitively because if there's even more lunacy, in other words, there could be still lunacy in the final hour and further lunacy in the final hour and a half. If these lunatics take this thing all the way back up to here, and I wouldn't rule anything out, by the way, I don't think that'll happen. But I'm just saying, if they took it all the way back up to, say, the 100 and got near this gap closure, then my whole perspective might shift because it might be so overbought intraday that you have no choice but to say, well, this thing needs a breather because it's, you know, hitting, let's say, 80 on like a 1 hour RSI. And that to me, I've mentioned this over the course of time. When you start getting readings like that, you can go a little bit further, but the overwhelming majority of the time, in my experience, you can't go that much further, and you usually give some back not too long thereafter. So let's get back to our PowerPoint coverage. We got that covered. That's the current assessment. Reality is, however, in my opinion, rates have been higher for longer, and the economic cracks are multiplying. I'm not going through all the tabs. We didn't go through them all this week, but yes, the economic situation is just getting worse, and they can continue to lie about it. It just won't change the fact that it's getting worse. So, and I mean, like, everyone can continue to lie about it, and everybody can keep winking at each other and not talk about it on business television where they really should be talking about it. But of course, most of them try to avoid that. October does not have the stellar start, right? That was almost too obvious to expect last week. We did depart from the cycle as a result. I think this was due to being the obviousness of it and what happened really mainly with TNX, right? Mainly with the yields we saw just screaming higher this week. But the charts right now look tremendous. And I don't mean TNX and DXY. I mean, the charts that look really good are the SPY and Friends, right? Those all look really good. We've been hitting on Ryan and I know I probably get a little more carried away than Ryan because I probably look at things a little more long term because I have more time to do it than he does. But I've been pounding the table as like if the market goes, I really like Google, I really like Meta and it's strictly I detest those companies for what they've done to the society and how manipulative they are and how they're in cahoots with, you know, some forces I'm not really a big fan of, but the charts themselves is what I'm referring to. So I really like this Meta. We have bullish ideas in both of them somewhere, but these are the things, you know, that again, I think like if you keep doing the work, it really pays off for you, that you're good to go in terms of as soon as you know that they're coming after the market, you can go and say like, this is my short list of stocks that have great looking charts on the bull side, and they're going to probably come after that. But yeah, I mean, things just look, if you go and look at it, they had things like on the ropes, on the ropes, on the ropes, but then they took them away from the ropes and then some. You know, there's that kind of gap closure in the Qs that the spiders have further work to do. Even IWM, which was getting routed, right? They're using this oversoldness that it had, the fact that it reached this key level down here. You can see it's supported nearby a few times here. And I don't remember what my level was on that, frankly. But they really, yeah, they've got things just jammed in a big way. And I don't think, again, I don't think you can rule it out. You're coming from such a deep oversold status that I would not fight this thing. I'd be willing to trade the long side. And you just got to remember you're in a tricky market. But I think a lot of charts out there do really look good under normal circumstances. Like I said, we may as well start just saying yield neutral for now. Bottom line right now is, look, the relief rally acrobatic team seized control today. I still think the market's tricky because we know this is sort of more technical. It's more shenanigans. It's probably orchestrated. The same thing really happened in Europe. Things are not getting better in Europe. It's kind of the internal plumbing situation. So I would go from DEFCON 1 last week to DEFCON 2, where you could be right back to going on the defensive as a bull or playing offense as a bear very quickly if Ryan's take, which is that zero DTE and OPEX really combine to with other factors that I'm noting to create this super squeeze today. I'd still think that they can do whatever they want, but as long as yields keep going up, I think they're going to be under pressure. If yields back off, I think that opens the door to more relief rallying. But let's see. I still don't think we're out of the woods. You got to keep your eye on this, and that doesn't mean just tomorrow, or I should say, really Monday. I mean, I think that's going to matter for a while until we get maybe to that next Fed meeting, and then we'll see. Maybe they launch. Someone in our chat room said maybe they launched their, or was it cocktail hour? Maybe they launched this rally at the end of the year because the Fed sort of surprisingly goes neutral on things and sounds more neutral. Could be. I mean, good luck. I would go with charts as a trader for sure, but I would say good luck to bulls who think things are really stellar out there on Main Street. I don't see it. I've been saying that for years at this point. So the Cascades phase was averted. They're still early October. We're still, we come back, we still won't be through the first third of the month. So this, they started today, right? Today's the 6th. So could they still have that kind of early rally? Not exactly the start of October, but yeah, we think they could reverse things a little bit. The second week turns out to be really strong. I'm at this point, right? I had to turn off Bloomberg. I'm laughing at what some of these permanent bulls are selling, and not in a mean way. It's just that I can't listen to it. It's just like, I don't know. I'm too old. I've been through too many markets, and I just can't, like, it's just trotting out the same stuff no matter what happens and telling people never to worry. That they've gotten people creamed. I guess some people right in front of their retirements, they've gotten creamed when they had too much equity exposure and they weren't taking proper measures. But what can you do? This does create the wall of worry. So I don't think there's any shortage of people like me out there, like Ryan, that aren't buying this story about how everything's going to work out wonderfully. Just don't think it will be. I think that I still hope to be wrong. Obviously, I don't want to be right about that. But as far as nervousness goes, I think it's getting there. So I think that, as I note here on the final line, I think many of these key factors remain unsupportive of the equity markets. I think it's looking more and more like what we saw from OCC through July of this year was more of a rally inside of a larger bear market at this point, with what's happened with rates staying higher for longer and how economic activity was revised lower for 3 years, and things are getting worse and worse and worse, and people are in heavy duty debt already. People are already missing payments left and right. This is a disaster in the making, potentially, if the Fed continues to raise rates. In my opinion, I think they should chill. I think they should see what the lag effects are of these rate increases. But again, they don't call me. For now, bulls are safe. But I do think that it's possible if we do roll over again, not maybe next week, but the way I'm thinking, maybe more down the road. I think there's going to be some jump the gun anxiety. What I mean by that is I think there's going to be a lot of people that put a lot of money to work, as I was saying, and I said this a lot in the first half of the year, And I think these people are trapped. They're trapped with really high basis prices on the acquisition of shares of some companies, mainly big companies, and they are in trouble as a result, because if we do really not go into a real economic expansion, we aren't in a bull market, and we're really more in a recession and a potential second leg of a bear, I think a lot of these people are in big trouble. So what you have to look for, I almost kind of like the clarity of my other chart a little bit more, because I know that even though this is my basic chart, it just can be tough on the viewer here. I might have to go back to that. And all the colors are a little bit, kind of like a little bit different. But what I want to point out, I'm just going to point this out in in sector situation. I will point this out as well. Oh, where can I grab that? I'm going to pull this over onto our viewing screen. And I just want to note that what we've been talking about in general is they were able to hold communications, right? They were able to hold technology. These are where the big dollars are, right? Where most of their money's invested. And so they didn't really, those did not crack. And I think that was another sign that we shared, that they did not fully crack. And as long as they didn't crack, you're probably not going to get the cascade phase. And they managed to hold those, right? And along with really the SMH, which I'm bringing up now, bringing up now. And they managed to hold these, right? You can see that the SMH didn't even trade down to that 150 there in rust on this chart. It held above there. So that's the leadership area, at least one of them. That's where the magic is still happening. And of course, the Magnificent Seven, as everyone's calling them now, that's where the rest of the magic, of course, is happening, is in terms of individual names of those super mega caps. So they were able to keep all of those really afloat. And as I noted, right, you've got, let's go back to here, but right, not only are they still floating, but look at Meta. I mean, again, I'm not trying to pat myself on the back. I mean, it took what I thought it would take. It took a really strong market to really let these things go. And if you're new to what we do at Market Rebellion, and a lot of the longtime rebels have heard this countless times, but we're really big on having that market wind at your back. And we're really big on even really good stocks in terms of their charts and the technical complexions they're flashing are not likely to perform well over net, right, themselves without stock specific news or that market's wind at their back. And you can see that, not that other stocks aren't bouncing back that were crushed, but this one really hung in there. And you can see that, it's having quite a nice day. And that's also happening in Meta as well. And I still really like these charts. Overall, to me, these are some of the best charts, but of the big names that are out there. But you have to also be careful in that the chance does exist in the near future that if they were to rally a little bit more, you could have a double top forming, right? So you always kind of want to be one step ahead, if not more, in your thought process when you're doing this stuff of like, what could happen here? What should I be mentally prepared for? That way you exercise your discipline, right? If you get up here, you can't get more out of it, you start to see rollover signs emerging, then you have to say, like, it's not just a potential, hey, get out of this trade. It could be, if I'm in something longer term, it could be the sign that we may be forming a double top if we get up there and this market starts rolling over again. You got to be careful about that. Double tops and double bottoms to me are simple patterns as it gets basically, but in reality, they're also, not only are they I think highly frequent in occurrence, but they're also pretty reliable if you add a couple other factors into them. That's how I look at them. But look, everything, they've got all the big four, right, screaming. We've looked at them all. I don't want to belabor this anymore, but they're all screaming. It's all relief rally-esque stuff. They're not letting go. Suddenly, right, you have to think of it this way, that suddenly people want to pay 3% more for stocks than they did on average than they did earlier today. Does that make any sense to you? That suddenly people are scrambling to pay 3% more than they could have paid a few hours ago? But That's the way these guys roll. So that's where I'm going to leave it. I'm going to leave it, go back to the SPY, and we don't have to belabor the TNX and the dollar. Like I said, those are probably both. It's probably worth checking on the dollar, and the VIX was really doing its thing, where I think there was real risk out there and people were worried about it. But the VIX turned tail like it typically does, and they've been masters at. Let's face it, they've been masters at tamping down the VIX when they've had to, especially on a Friday. And then, there a lot of this, even on Fridays where the VIX managed to not succumb to the pressure, they've smashed it. There's been no memory when they've smashed the VIX by lifting the market on Mondays, if ugly Fridays didn't happen. But there you go. You can pretty much say the 20-day, which is golden colored too. There's your support line that I would just quickly drop in on the dollar. And that's close to like one bad day, and you could be breaking that intermediate term trend, and there could be a little bit more of a corrective phase. And so this is kind of where I'm coming from in terms of why do you think, if this is not expiration shenanigans, and again, Ryan seems to think that it is expiration shenanigans and OPEX. Now, I do think certainly there's an element of some of that. I think you have to acknowledge that, but at the same time, I don't think that that's the whole explanation of today's action. I just think that super oversoldness, bombed out nature of things, it could definitely lead to more rallying, especially the way that these candles shaped up in some of these technicals are shaping up in TNX and DXY. And just for comparison purposes, this is off screen, but right now the TNX is as stretched as it's been in nearly a year from the 200-day. So that's this blue line here. So you're not quite the most stretched, but this is one of your most stretched phases. So when you get this stretch from your SMAs and you've been kind of overbought for a while, the way that it has been, you really can't get too cocky, right, and say, well, no, the yield should keep going up and hang on to that. You have to acknowledge that even if you are, I think, a longer term yield or rate bull, that you think they're heading up, that there's going to be these little corrective phases or pauses right along the way, even in a strong move. So I think that's sort of more due than not. And that's exactly really the difference maker for me. Maybe I'm reading too much into it, but that's the difference maker for me in terms of why I think they're going to try to do a little more with this next week. And I'll take the VIX and we'll wrap it up. VIX and SPY and wrap it up. You can see VIX, and who could be surprised if the VIX works its way back down a little bit. It was really hanging tough there. It tells me that a lot of people took it seriously. I saw a lot of put buying, but people, I think, were hedging, were really worried this market could really fall out of bed. And there you go. Lo and behold, of course, this is the end result. So at the very least, right, I would think this thing comes back up towards that 20-day, unless in a yield neutral market early next week. I think they try to push it at least a little bit more. Then you start looking at your other SMAs, the 100, the 50, the gap closure, if they're able to do even more with it. But I wouldn't be surprised if they were. I wouldn't be surprised if it ran even further than that, because there's probably still a lot of hope out there that these companies are going to have this miraculous report that they were able to price gouge U.S. consumers yet again, and the consumer just continue to be there because they really aren't sure where to go, because everywhere they look, things are exorbitantly priced, and so people have not fully adapted to this. I think eventually these people are going to really create problems for themselves that are essentially doing the shrinkflation and all that. I think people are going to have long memories about how they really had the screws put to them by these companies that gouge people that in some ways, and then you see the prices in other countries. Hopefully that'll become something that's more widely known and part of the public consciousness, that this price gouging is just straight up wrong. There's a lot of people, I think, that are having a rough go of it out there. But what can you do? You're fighting against City Hall. You find yourself doing that more and more all the time. With each passing year, you're fighting more and more against City Hall, but it's a whole nother discussion. So on that note, I'm just going to say, I hope something I share with you helps you out this upcoming week or some week in the future. I want to thank everyone for tuning in. I'm sorry I can't do this with a full wrap with closure, but I got to open up the time. Unfortunately, you just got too much going on I wanted to make sure I at least got the video done. So good luck. It looks right now like if they keep this thing going, we just may finish overbought on the hourlies and things like that. And you may have to be a little more defensive, even if rates are going down on Monday morning, because this could be just absolutely too excessive. So everyone, take care. Have a great weekend. Again, thanks for tuning in.